All right, people. Stocks by the numbers. Welcome back. Really quick update here. Super Micro Computer Incorporated, ticker symbol SMCI, listed here on the Nasdaq. Stock took about a 9% hit today. Closed at 711.56 a share, down over 71 points, a little over 9% on the day. Breaking below 700 now after hours, down another 12.5 points, almost about 2% more after hours. And in my opinion, I mean, it really did rocket up. Again, we went from about 300 up to about 1200, and now we've kind of just been slowly just kind of flattening out. Overall, in my opinion, I've already laid out that I feel this stock will probably eventually start climbing back up to 1200, 1500, potentially 2000 plus over time. The demand is there, and even if we look at what they're forecasting moving forward, we can see that right now analysts, for the most part, are pretty bullish. As you see, we have 19 analysts currently covering the position, 10 giving a strong buy, 3 giving a buy, 5 saying to hold, 1 person still saying strong sell. Of course, again, it did go on a massive run from 300 to 1200, so we could pull back easily like half of that. We could pull back to like 5, 600, no problem, because this is what I was talking about. Now we have big market pullbacks, and this is why I said, as they're taking all of these tech stocks to the moon, you have to be careful, because technically, on paper, looking at the numbers, you could make the argument that almost all of them were overvalued and were seriously being pumped up, 2, 3, 5 times maybe their real book value worth, if you will. So all those stocks, the Apples, Nvidia, SMCI now gained some attention and really started rocketing, got listed on the S&P. So this is what I mean. Now after doing a big run up, we could potentially flatten out and then sell back off and drop back down, because again, as much as SMCI might have potential growth looming on the horizon, it doesn't matter, because it can go lower. And as I always said, in my opinion, if something can go lower, they will take it lower, especially if they decide to turn it into a sea of red now moving forward. And I just want to remind everyone, yes, I've personally said that markets were too high. We should start selling off. I've been saying that for months. And we just kind of continue to just run up. And we never really know when the high is going to take place and when it's just going to stop and start selling off. So, of course, no one's ever going to be 100% correct. But I bring that to you because I just want to remind you that it was basically around this exact time last year where markets were selling off. So if you recall, this time last year, basically August, September, October, markets were down. Then what happened? November came, we started to climb back up, supposedly on the news of rate cuts that never came and cooling inflation that isn't happening. But we've been up basically since then. So what goes up must come down. We know this. So this is why, again, I mean, will it be a straight 3 month sell off? Honestly, I have no idea. There's no way to know. But realistically, we should. And we shouldn't have gotten this high to begin with. So that's why when you see big red days like today in, these spotlighted tech stocks and even the major indices across the board, I mean, you can't be shocked, right? You really can't be stunned here. But back to SMCI. So what I want to show you is a level that I'm personally looking at. So they confirmed earnings coming out August 6th, which is, it's about 2 weeks. They're expecting over $8 a share on over 5.3 billion. Last quarter they slightly missed, got up to 385 billion. Now we're looking for 5.3 billion. So now over the next several quarters the revenue is really going to start to chunk in, and I know they're forecasting like 16 and 28 billion or something. So they are expecting much, much more growth to come forward. So unless markets really crash, it's probably going to slowly maybe tap some of these key levels and then over time rally back up to where it was. And I know the stock is expensive, but we're only talking about a 50 million float. And again, we basically got up to that four-figure mark and then started to pull back. So if we do get back there, I have a feeling, in my opinion, that a potential stock split could be coming on SMCI over maybe the next 6 to 12 months, but only time will tell. We'll see what happens. If we come down here, they also recently announced something with Nvidia, I believe. They took on more debt. We know this. Here we go. NVIDIA SMCI partner to boost simulation efficiency. There you go. ANSYS partnering with SMCI and NVIDIA. Turnkey hardware solutions that dramatically accelerate ANSYS multi-physics simulation capabilities. So, you know, this is basically what we knew what was going to happen, right? We knew that these major tech companies like your SMCIs and your NVIDIAs were going to continue to get tapped. The problem was we just took them so high so quick that, again, just like I always say, you get to a point where even if the company announces something positive, or even if the company beats earnings handedly, sometimes it doesn't matter. Sometimes the stock will go flat or potentially just continue to sell off just because we ran up so much. Now, again, you know, realistically, is it going to come back down to 300? Probably not, unless markets really pull back to like where they were a few years ago. But here in the short term, I just want to show you a support level that I'm watching. And again, this was from the big run up here from 300, as you see, up to about 1070. And then we spiked down and then rallied back up and took that next leg higher. So on that pullback, you can see the low here. Again, top left of the screen, the O, the H, the L, the C. That is the open, the high, the low, the close. You can see the low, 692.5 even. Cutting across here to the bottom that was hit here, 671 on April 22nd, 2024. Cutting that across, you can see we have other support levels that I drew out previously, right? And you can see it's approaching this one, which for your records looks like the end of April 2023, connecting to that bottom right there of early January 2024, just cutting up and across, and you can see that we are close to that trend line as well. So if we come down, if we touch this level, let's just say we're looking at, yeah, maybe like 665, low 660s. If we happen to bounce, maybe retest the fib, 7.25, and then break down, well, this is going into earnings, let's say it's like here, hypothetically. If we drop to this level going into earnings, right, we're looking at like 643, 644, and then we're potentially going to bounce and start running going into earnings, of course, on that hype, on that momentum. So only time will tell, but in my opinion, those are the levels to watch there, about, you know, 660 and change, maybe like 643, 642. And if we switch over here to stock charts, we can see that our RSI has been dropping hard. We're at 31.33, so we're approaching that benchmark, and technically we just broke below the bottom Bollinger Band here on today's big drop, so we could have a little bounce tomorrow, not only in SMCI, but in the markets overall across the board. But you can also see that this 200-day moving average has gone from off the screen when the bull dropped, sub 250, now it's at 650. So even though it might hurt here, and we've kind of quote-unquote done nothing for a couple of months, in my opinion, a bounce and then a sell-off touching and testing that 200-day and then maybe bouncing, in my opinion, that would actually be a healthy sign for the stock. 200-day moving average sitting just a nickel below 645 on the daily. We switch over to the weekly, and we can see that our bottom Bollinger Band here is 677.63. So maybe as we slowly pull back, that could drop into the 660s, and we could touch that key level and that trend line as well, and then possibly bounce going into earnings. But just look at these moving averages here. And again, this is just over the last 2.5 years. Look at this. I mean, this 50-day moving average here, as you see, what? We're at like $25, $30. Now it's at almost $600. 200-day moving average going back to mid-August of 22 here off the screen. Now it's almost $200 a share here for these moving averages. So this is why, again, I always say, in my opinion, this is why you want slow and steady to win the race, because as you see, we're on the up and up. Now we have our moving averages slowly and steadily climbing, and now they're potential pullback levels. So if I told you now in the long term, yeah, if markets sell off, we could hit 583, but then we should bounce and go to 1500. It will suck in the short term, but again, like we always say, sometimes you have to deal with the short-term volatility for the long-term growth. And the point being that because there's so much demand and revenue growth now coming into SMCI, in my eyes, it really shouldn't touch and break down to those lower levels here. It really should stay solid, and it should stay up here at 500-600 a share, in my opinion. But again, like we always say, even if you start buying here at 700 and let's say markets pull back, it drops back to like 450. Again, yeah, it's going to suck because it's immediately down after you bought it, but if you liked it at 700, you should love it at 400. So again, it should be viewed if you have consistent income coming in, I will say, right? It should be viewed, in my opinion, as an opportunity, not always as a negative. But let's just look quickly at what they're expecting to bring in, which is why, in my opinion, I'm personally, bullish on it. And you can see, look, going back, just looking at the history again, we had a slight miss there on revenue last quarter. Before that, only one miss going back the last 7 quarters. So the company has been pretty steady, and you can see moving forecasting 5.3 billion, 5.5 billion. This is just for the quarter. Over 6 billion, 6.2 billion. And if we switch over here annually, if we switch over here annually, you can see, look at this, haven't missed, slight miss there in 2016, and that was the last time. Since then, the company has been just kind of rocking and rolling here for about the last 6-7 years straight. And moving forward, we're expecting, again, as you see, we went from 7 billion here to close out 23, up to almost 15 billion in 24, close to 24 billion for 25, up to 28 billion in 26. Curious to see what happens here with this big drop off. But, if everyone's putting their orders in now over the next couple of years for the next 5-10 years moving forward, well, then in my eyes, it really doesn't matter what happens here. You kind of cross that bridge when you get to it, because probably sometime in this range, in my eyes, we should easily be looking at like 1,800, 2,200 a share, and then potential stock splits, of course, maybe one or two along the way. But from this current level here before splits, I'm still, in my opinion, pretty confident that we're going to see 2,000, 2,200, 2,400 a share in market value here. And that would basically bring us to like 120 billion market cap. But again, I mean, we took NVIDIA to the moon, more consistent than not. And now look at the demand and the growth here, basically more than doubling the revenue year over year. And then, you're talking what, 60-70% jump. And then you go from 24 to 28, right? So you're still talking 1/6. So you're still talking like another 15-16% jump here year over year. I mean, very, very impressive in my opinion. And look at the profitability as well, expecting to soar up to almost $12 a share to close out 23. Now essentially doubling it almost to $24 a share, and then chunking it up again, basically 50%, up to $34, $43 a share. I mean, if this company does this, in my eyes, there's really only one way the stock could go. But on the technical side here in the shorter term, again, in my opinion, if markets continue to pull back and supposedly money, pulling out of tech, we went too high, all of a sudden we're too high, right? But now if we pull back, in my opinion, you're looking for about, like the mid 660s here on this trend line, looking for a bounce. If we break, you're looking maybe 645, that moving average we looked at. Now we have 643, 642 here at the trend line, and potentially bouncing then going into earnings. Only time will tell. For an earnings play, I mean, a little bit of an expensive play, but in my opinion, I know we still have 2 weeks, anything can happen, but in my opinion, I'd probably give the company the benefit of the doubt here. And that's pretty much it, so I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for your time. Have a good day.